I'm Thomas Hunt from the World Crypto Network, and here are today's Bitcoin headlines. First mover, gold is crushing Bitcoin, but inflation may bring the cryptocurrency a boost. In CoinDesk, by Bradley Keown and Omkar Godbol. Is physical gold leaving digital gold behind? It's a question worth asking, with the yellow metal having rallied over the past 4 trading sessions to reach a new 8-year high, around $17.25 an ounce. Gold is up 14% in 2020, a superlative for performance in what has been an annus horribilis for many traditional markets, stocks, oil, and industrial metals like copper and aluminum. And what about Bitcoin? Seen by many investors as a digital form of gold due to its perceived use as a hedge against inflation, it's down 4.1% on the year. The gap between gold and Bitcoin returns has frustrated traders who predict that trillions of dollars of coronavirus-related emergency aid and monetary stimulus from the Federal Reserve and other authorities will eventually lead to inflation. The International Monetary Fund on Tuesday estimated that the global economy will shrink 3% this year, down some 6.3 percentage points below its most recent projection in January. What's changed, of course, is the pandemic, which has led to business disruptions and travel cancellations while cratering energy demand and decimating consumer spending. The magnitude and speed of collapse in activity that has followed is unlike anything ever experienced in our lifetimes, the Washington-based organization's chief economist, Gita Gopinath, wrote in a blog post. Recessions are often deflationary. Lower demand alleviates upward price pressure on products and services, while surging unemployment makes it harder for workers to demand wage increases. Deutsche Bank says a U.S. government report on Thursday might reveal another 8 million jobless claims filed last week, bringing the 4-week total to 25 million unemployed, at least 10 times worse than any prior comparable period in the previous half-century. The unemployment rate would rise to 17%, from 3.5% as recently as February. Federal Reserve officials appeared determined to keep inflation at bay. The central bank targets annual price rises of 2%, and Vice Chair Richard Kalira told Bloomberg Television that monetary authorities have the tools to keep the economy out of deflation. Translation: more money injections are likely. Last week, the Fed's balance sheet ballooned past $6 trillion for the first time in its 107-year history. So why isn't Bitcoin getting the uplift that gold is enjoying? One possible reason, according to Jeff Dorman, chief investment officer at cryptocurrency-focused firm Arca Funds, is the physical metal is so much easier to buy. That's especially true for traditional investors who have long turned to gold as a safe haven during times of economic and market turmoil. Gold can be easily purchased from the same brokerage accounts as stocks and bonds, whereas Bitcoin cannot be. Dorman told CoinDesk in an email, anyone who sold equities or debt and is sitting in cash needs to put that money to work, and it's easier to purchase gold than Bitcoin. It's as plausible an explanation as any, given that Bitcoin was launched just 11 years ago, while gold has served as a symbol of riches since at least the Sumerians civilized Mesopotamia. According to the World Gold Council, an estimated 197,576 metric tons of gold have been mined throughout history. At 32,150.75 troy ounces per metric ton, and based upon the current price, that works out to an outstanding value of around $11 trillion. That's 87 times the outstanding market value of all Bitcoin ever produced, currently around $125 billion, according to CoinMarketCap. People that have money, investment capital, they're definitely more familiar with gold, says Philip Meng, who until recently was the head of trading for Fox, a cryptocurrency trading platform. Gold is definitely preferable to Bitcoin at this point, because of just the understanding of the asset and access to the asset. In extremely uncertain times, people might simply gravitate towards things that are more certain. I am skeptical that during times of a severe recession, people would want to deal with an electronic type of entity. Frank Shostak, an associated scholar of the Mises Institute and chief economist and director of AAS Economics, told CoinDesk's Omkar Godbol on Tuesday. Bitcoin has been touted by some proponents as an uncorrelated asset that can help to increase returns in an investment portfolio while reducing overall volatility and risk. But that hasn't stopped analysts from spotting occasional periods where Bitcoin seems to trade in sync with counterparts from traditional finance, from gold to the Standard & Poor's 500 index of U.S. stocks to the dollar's exchange rate with the Chinese yuan. In a report published Tuesday, Coinmetrics, a digital asset research and data firm, ran the math on Bitcoin's correlation with gold. Historically, the correlation hasn't been strong, wrote the analysts, led by Nate Madry. But since March 12th, the depth of the coronavirus sell-off for Bitcoin, the correlation with gold has increased. It's still pretty weak, and currently at less than 0.5, where 1 represents perfect synchronicity, 0 is no correlation at all, and -1 is a perfectly inverse relationship. These are small pieces of evidence that the correlation between Bitcoin and gold may be growing, according to Madry and the Coinmetrics team. However, Bitcoin's overall correlation with gold is still relatively weak. What might be seen as interesting, if not more, is that recently at least, Bitcoin does appear to be trading in sync with inflation expectations. The Coinmetrics team analyzed the cryptocurrency's correlation with the 5-year forward inflation expectation rate as published by the Federal Reserve Bank of St. Louis. Here's what that looks like. It's a pretty stark upslope at the far right end of the chart. The takeaway? Although the short term is still uncertain amidst the global pandemic, this could potentially be a long-term inflection point for Bitcoin if federal banks around the world continue to inject money into the global economy at historic rates, according to the report. There may be hope yet for the Bitcoin bugs. Tweet of the day. Ryan Selkis, at 2BitIdiot. The cumulative loss to global GDP over 2020 and 2021 from the pandemic crisis could be around $9 trillion, greater than the economies of Japan and Germany combined. Bitcoin Watch. Trend. Bitcoin is lacking a clear directional bias for the second day, with prices trapped in the 6,600 to 7,200 range. The leading cryptocurrency by market capitalization ran into offers near 7,200 over the weekend, as indicated by the long upper wick attached to Sunday's candle. However, the ensuing price dip found buyers near 6,600 on Monday. The outlook will remain neutral as long as the $6,000 range is intact. A move above the top end would open the doors to a rally to $7,800, target as per the measured move method, a level last seen before the March 12th crash. Alternatively, a range breakdown could encourage sellers and yield a drop to $6,100. The bearish scenario looks most likely currently, as Bitcoin's repeated failure to keep gains above the 100-week average of $7,060 over the last 2 weeks is indicative of bull fatigue. Further, S&P 500 futures are flashing red at press time, alongside losses in the European equities. Investors are selling risk assets, possibly in response to the International Monetary Fund's forecast of a 3% contraction in global GDP in 2020. That said, losses in both stocks and Bitcoin could be limited, with the Federal Reserve injecting an unprecedented amount of liquidity into the system via its open-ended asset purchase program. Professional investors are also sitting on record amounts of cash, some of which may make its way into the Bitcoin market ahead of next month's reward halving. The event, aimed at controlling inflation, will reduce the amount of Bitcoin created every 10 minutes or so from 12.5 Bitcoin to 6.25. This has been First Mover. Gold is crushing Bitcoin, but inflation may bring the cryptocurrency a boost. Thank you for watching Bitcoin Headlines. My name is Thomas Hunt. Remember to like and subscribe. You are watching the World Crypto Network.